So we were talking about central banks, the digital currency ecosystem, fintech, and payments and regulation. Well, C.Cadet works with central banks all over the world to provide infrastructure for digital payment solutions, compliance, and regulation. And MTech, the company she founded, is already working with the central banks of Ghana, Nigeria, and the Bahamas. She's a thought leader in fintech, and she also advises other women and fintech entrepreneurs. She won the 2021 Inspiring Fintech Female Awards by the New York Fintech Women Association. In a previous life, Carmel was a deputy CFO for IBM Blockchain, where she spearheaded the global product commercialization and financial management strategy. Thanks for joining us on the show today, Carmel.
To be here.
So, this is quite a big story in recent years because central banks have been playing in this space. Can you tell us what the market currently looks like for central banks who are trying to promote financial inclusion through this sort of innovation?
Of course. So thank you for having me on. This is really a timely topic because it matters in the matter of financial markets and also technology, capital allocation, and regulation. Central banks traditionally have been really focused on policymaking, and as you were discussing in the previous segment, price stability, and also being able to provide regulation for the financial system, for consumer protection, for credit availability, and again, price stability. But when you think about the context in which financial sector is evolving right now, when it comes to digital payments, when it comes to new types of assets, and also different form of technology for those different types of assets, central banks have been put on the spotlight to say, can you actually evolve with this financial sector that you're mandated to regulate? And as consumer preferences change, and we've seen that a lot, and especially in Africa, with the revolution of mobile money, but also different priorities that central banks are trying to drive, whether it's credit availability, financial inclusion, financial access, so dissemination of policies can be more effective. When, as a central bank, if most of your population are not particularly tapped into the digital economy or a financial economy, your policies are very much less effective as you would want.
Yeah.
Therefore, it is a risk and also an opportunity for central banks to look at how can they, as an enterprise, as a financial institution, to use technology in order for them to become better, more effective in today's financial market.
So the question then is, are the central banks evolving with those trends? That, in terms of the work you do across Africa, are you seeing differences in the way frontier markets, developing economies, central banks are innovating compared with the rest of the world?
Absolutely. It is very hard to see publicly, but it is absolutely happening behind the scenes. When we have conversations with central bank, as you can imagine, as a technology provider for them, it's a different conversations compared to from a financial institution or financial service provider that wants a license to be regulated and launch a new product. We bring solutions to regulators. We bring technology solutions to central banks. And the conversations are absolutely exactly that. How can we become more innovative? And it comes in different forms. The questions come in, can you help us regulate better? Okay. Can you help us? What technology should we be thinking about to get better visibility on capital flight? In order for us to make the right regulatory frameworks and the regulatory decisions in order to maintain our mandate, like financial, like FX stability and price stability. So it is happening. The context of cash, for example, going digital, as you very well mentioned at the beginning, central bank money is public money.
Okay.
It plays a key role in the financial market compared to private money. The access, even if someone doesn't have a bank account, they can use cash, right? What does that look like in the digital world? It doesn't, the dynamic between the private sector does not change. You still need a resilient financial sector, financial institutions to do that, but you should always have a backbone, the riskless asset in the economy, and that's central bank money.
So break this down for us, because you said a lot of things. You say part of your mandate is to help central banks regulate better. So what exactly are you deploying for central banks to regulate better? And how do you think they're not regulating well? Help us explain what the product or the innovation is.
So one of the kind of really light bulb moment for us as we started engaging central banks was the idea of a regulatory sandbox.
A regulatory sandbox, what does that mean?
Yep, and this is a kind of, traditionally it's been a policy that some central banks have evolved from UKFCA, US CFPB, and also Monetary Authority of Singapore. The concept was when there's no regulatory framework, especially at the pace of innovation, regulation cannot keep up. How can we create an environment for newcomers and new ideas around the financial service industry to go to market with some level of supervision to make sure that they're not destabilizing the economy.
Okay.
That does multiple things. One, you get a faster go-to-market for innovators and fintech companies, but you also now have some level of supervision, central bank, to see what the innovations are all about and learn and try to understand what are the risks of such innovation so you can better inform policy frameworks.
Right, okay.
So regulatory sandbox is something that we took from really a policy concept into a very actionable tool. So we built a platform that allows central banks to digitize a license application for innovators to come to market. And we built what we call APIs, which are a way to gather data and for you to have visibility into what's happening. That gives them some level of security, some level of visibility, and we do the data visualization where they can see how many transactions are happening, if it's credit, if it's payment, if it's remittance, for them to get that visibility and inform them.
Yeah, so that makes sense. I think I have a better understanding of that now. So looking at Nigeria, for example, one of the things that the fintech and payment service ecosystem have felt is they felt they've been over-regulated. We wouldn't even go to the crypto operators because in some ways, people would say one of the reasons they've been over-regulated is because of a lack of understanding of their space. And then we've also seen central banks, not just in Nigeria, start their own digital currencies. So if you put those two together, then the question is, are central banks trying to create their own market and prevent new entrants from coming in because they don't understand how to regulate those new entrants? What's your take on that?
Absolutely not.
Okay.
If you look at that, it is very traditional. Today we have cash. Central banks print cash. What we're talking about in the case of central bank digital currency, what central banks are looking at are how do they introduce a digital version of cash. Now, I think there are different models on how to introduce central bank digital currency. In the case of Nigeria, there was a e-wallet, an app, the app specifically that was available for users. We've seen the same. I was part of the first generation of DCBDC in Bahamas. You have a situation where central banks are trying to introduce a new form of cash. However, the ecosystem sometimes is not yet ready to embrace. So the introduction of a direct wallet is not because a central bank wants to replace fintech or wants to start doing consumer banking. They don't want to do the AML compliance. They don't want the responsibility, the risk of doing KYC. They are the regulator. They want the private sector to do that. But sometimes in the initial phase of that, sometimes you need to introduce it so you can show what is possible and then roll it back and start getting the ecosystem on board. Bahamas did that, China did that, but I think it has to be done in the right way. It has to be done in the right context. Ecosystem engagement is very, very important. We did a ECD hackathon in Ghana that was highly successful in the context of really working with the ecosystem, especially the fintech ecosystem, because they are more ready to embrace something new. And if you think about the role of cash, today cash is paper. So if you're a fintech, paper cash does not help you when it comes to liquidity, when it comes to payment flowing to your platform. But digital cash can. It's almost a new balance sheet that becomes available for fintechs.
Absolutely.
And I think there's an untapped opportunity, and it's more about talking and educating about that.
Yeah, and I think you make a good point because central banks also probably have a broader mandate of financial inclusion. And so maybe this is part of that push. So for those central banks that have launched digital currencies where you've seen very little uptake compared to what was originally expected, how do you think they can improve the potential for consumers and users to actually key into those digital currencies?
Yeah, and you put it in the context of the crypto market. I'll touch on the financial inclusion first. The idea of distribution of digital cash, in my opinion, central banks and fintech ecosystems have a lot that they can work on together.
Okay.
There are mutual benefits. We talk about how can fintechs actually help improve resilience and lower risk in financial markets and lower fraud and money laundering in financial markets. Those are mandates from the central bank. However, the operational aspect of it comes from the ecosystem. Can a more resilient financial market help everyone?
Yeah.
Can fintech grow faster? Can risk be lower? Can stability come faster? And depending on the fintech solution or tech solution, not just fintech, you need trade, you need supply chain, you need education and healthcare. How can tech really embed into all of those industries to accelerate whether it's local production, local consumption, and again, indirectly impacting price stability? So I think what you're going to see, or at least what I'm hoping is, the understanding of how digital cash and what role it can play in the financial market, and how the ecosystem and the regulator can really align their priorities and their goals.
Yeah, and I want to find out, what are some of the differences you're seeing in the way, say, the CBN in Nigeria is regulating that space compared with other African markets or other markets around the world? Because obviously you've been doing work across board.
Sure.
What are the learnings that can come from these different markets?
Well, first, let me say, and it is not said enough, Nigeria has advanced financial markets in many regards, whether it's real-time real-time payments and instant payment that is now, this year got launched actually late last year, got launched in the US.
For the first time, real-time payments in the US.
Correct. FedNow,
one of the world's largest economies.
That's
right?
correct.
Yeah.
FedNow became live last year. Nigeria has had that for about 5 years now, since 2020, I believe.
Actually, probably even longer.
Longer than that.
Yeah, much longer.
Mobile money is not something that's actually really available in other markets in Africa. When you think about the USSD, telecommunication, telecom infrastructure, the investment that has gone into that, and people sometimes don't maybe take it for granted that the trillions of dollars and trillions of naira or cities or Rwandan francs that run through USSD and telecom infrastructure before data was available. That's groundbreaking innovation that happened in Africa, and that really has not been available. But in different markets, you're seeing sometimes different innovation. Venmo in the US or PayPal in the US introduce a way for people to move money within their bank accounts without having to go to the bank. But you're seeing the regulatory framework right now evolving in different ways. The second, Nigeria was one of the first regulators to put regulatory framework around virtual asset service providers. And European Union is just doing that right now. Singapore is working on that right now. So you have different markets that are dealing with different dynamics and trying to provide regulatory assistance and regulatory guidance, but also learning. I think we have to be patient. Nigeria was the first country in Africa to try CBDC. It didn't work well the first time. That doesn't mean it can't work well in the future.
Yeah.
So there are lessons to be learned from that, from other countries, for other countries. But also this was leadership, right? It is between the virtual asset service provider regulatory framework and a central bank introducing a digital version of their cash. I think what you're seeing is Nigeria really having a forward-looking aspect when it comes to financial services.
And I think you make some really good point in terms of African innovation being the pace setter and the rest of the world sort of following, catching up, because we have so many problems which we're trying to solve.
Correct.
So innovation may actually come much easier. So can you tell me, in your mind, given the work you do with central banks and fintech companies and crypto operators, what do you think in Africa would be the single biggest catalyst to really drive growth and value in this space? What is the one thing that needs to be done today?
I think people need to have more patience. And I know it's hard to say when day to day, it seems hard. When you think about FX volatility, depending on your circumstances, when it depreciates, it's good for you. When it appreciates, it's good for you, depending on the flow of your life.
Yeah.
If you're getting money from the US versus if you're paying money in the US. But their policies takes time to take effect. Everything that is an answer, your previous segment was talking about local consumption. You also need infrastructure for supply chain. Those are the investments that need to be done. And I think the best that everyone can ask for right now is actually, a leader or someone who has the right plan and knows how to execute on it. And I think the best that they can ask for is patience to execute on it. Because what happens in between setting up a plan and executing is people losing patience and doing all kind of stuff that makes policy execution, policy dissemination a lot worse. But what you're saying right now, the regulatory aspect of it, the ecosystem is very vibrant in Nigeria. There's a huge market opportunity, not only for local problems to solve, but there's a whole continent to solve problems for. And I think you're seeing Nigerians also look outwards to see how can we use our talents, how can we use technology, what we've learned and what we can do best to help other countries and go around the world. And I think you're going to see that more and more.
One of your major sort of client base is central banks. And we haven't really talked about traditional banking. If you look at the suite of solutions that you're providing for central bank in terms of their tech infrastructure and for fintech providers, what about traditional banks? Because all of this, the end goal is financial inclusion. You want to get more people into the net to create value. What are you doing with banks in terms of digital infrastructure?
So internally, we don't just talk about fintechs. We talk about financial service providers, not internally, but externally as well. Financial service providers is a combination of financial technology-driven companies when it comes to financial services, but also traditional banks. Two areas that we see that traditional banks are going to play a key role in. Still early, but the idea of digital assets is potentially a whole new business model and a new business opportunity. When you think about the liquidity, when you think about the custody, when you think about the security, the compliance, the money laundering, the infrastructure in banking is already there.
Right.
And what I think is the hardest thing to do right now for any legacy business is to actually think, how do you pivot given all the investments that you have made over the years? And now this new cool shiny things is, am I supposed to jump up and down and go try to figure out? But tokenizations of tokenization of assets.
So this is even moving beyond banks pivoting into fintech. This is now you're talking about digital assets.
It's what type of fintech? Because by the time, so they've been working with fintechs, introducing digital banking, online banking, apps, and so on. I think what you're saying is there are some banks that still need to catch up to that, but the ones who have already done that, now it's what's next. Because now they have fintechs, and according to CBN's circular, that fintechs are going to and saying, I need you to be my partner for crypto. Right? And the CBN has reversed the ban. So now the banks have to figure out, should I do this business or not? But tokenizations of a real world asset is a really big topic right now. I think
so when you say real world assets, real estate,
oil,
paintings, art, oil.
Commodities. Imagine a world where those assets are highly tradable, highly liquid, accessible to different markets, but more visible and more trusted.
That's a very interesting one.
So I think with asset-rich and commodity-rich and the opportunity around that is really limitless. And I think Africa has the talent and the hunger to get into that space. So now what is the regulation? What is the compliance? How do you keep that safe and continue to make it inclusive?
Yeah, very interesting conversation, Carmel. There's no doubt that Africa and Nigeria is green pastures for founders and tech companies like yourself, because we're just always solving. Right? We're solving for growth, we're solving for financial inclusion, and the scope for innovation is limitless and endless. It's great to see what you're doing with central banks because they play a very important role in economic stability, as do financial services providers. So great to have you on the show.
Thank you
I've been
very
talking to Carmel C.Cadet, founder and CEO of MTech, which is revolutionizing the modern central banking infrastructure.